Good morning everyone and welcome back to this new edition of the Daily Analysis. Today is May 21st and it is 9 o'clock in the morning in Italy. Let's start as usual with a recap of yesterday, which basically didn't bring anything new and unfolded as we expected sideways. Probably today we'll see a day similar to yesterday as well, at least that's what the first signs this morning suggest. Yesterday, both the trading volumes and volatility were low, with no significant macroeconomic data released, so basically the day went by without any major surprises. This morning there's some UK data that has already been released, which came out higher than expected, but I don't think this will lead to any further, major movements. From a macroeconomic point of view, today, the only relevant data concerns oil inventories for the rest of the day. As I mentioned at the beginning, there shouldn't be any surprises because there aren't any major macroeconomic releases. So we might possibly see some statements coming out. We'll see, and we'll take it as it comes, moment by moment. From a technical point of view, as we've said for several days now, we've been working with low volumes and a clear drop in volatility, and this is leading to the formation of trading ranges. This is the 5-minute chart of the Nasdaq. Basically, we can see how little by little the swings are getting smaller. Essentially, we're stuck in this trading range, which for the Nasdaq we can identify roughly between 21,560 and 21,100, or about 21,25 if we want to consider this area of lows here. So this is the reference area we're working with, and that we need to keep in mind. At the moment today, from an operational point of view, the market is slipping down a bit. We're working below S done, and we'll probably end up leaning on SD2 to find some support, because we've already broken this low here, which was yesterday, so there could likely be an extension even into the SD2 area, and why not even into the VIX area, to go and retest the low of this area of lows here. Then of course we'll see how the market reacts. Obviously on the downside, if the situation should returning to this range here, which I expect to be around the BC3 levels, essentially recovering it. Here it is in this area here. I expect a recovery of this area, and probably, we'll stay in this area for a while. Any possible upward moves, of course, we need to monitor this whole area here between 21,500 and 21,550. On the downside, as we said, we're watching this area here between SD2, basically the first VIX support. So this is the area to monitor for any potential bearish attacks. The situation is more or less similar, of course, also on E-share it is. Let's take a look. We are operating below S-Don, basically below the BC3 levels that were just broken this morning at 8. So we'll see that here too we will probably move down to SD2 to test this node. And here as well, basically, if this area doesn't hold, if we test this area and it doesn't hold, it could then trigger a larger decline, maybe even retesting this low here around the 58.7 area, which also seems like a very nice swing area to me. In short, a solid support zone. In this area, the market definitely sees me as a buyer on ES. On the upside, of course, we need to monitor this entire area here, the Ardon 5,980, 5,990, because obviously a breakout of this area could lead to strong bullish moves up to the 6,025, 6,040 area. So why not? Let's obviously take a look at the other two American futures as well, starting with Dow Jones, which is right here. I'm also in a similar situation on all the American futures. As for the Dow Jones, it has already landed right here, as you can see, on this nice support level on the bar chart at 42.5. Very nice. There could be an extension down to 42, 40.70, where we have placed our SD2 level. If this level doesn't hold, it will definitely push prices to retest this double bottom here, and there will certainly be a battle at this point. This is definitely a good an area, in short, where you can try some buying in anticipation of possible recovery. On the upside, of course, we are keeping an eye on this nice peak here at 42.7, 42.8, which more or less corresponds to today's HV area. A breakout here could easily bring prices back to the highs recorded at the beginning of the week. Let's move on to the Russell. Here it is. The Russell is more or less similar. Basically, we're right on the 2100 level, which I consider fundamental. We've mentioned it several times and highlighted it. It also matches up from a bar chart perspective with this whole area here. And then, well, 2090 is really the last stronghold to hold, which corresponds to ST2. So I expect that in this zone, some buying can definitely be considered with possible targets like RDZ, SD0, or even HV. If HV is broken, the price could easily return to the highs recorded last Friday, so around the 2120 area. Let's also take a look at the DAX, which is still fairly strong. Yesterday it made, a series of double and even triple tops. But honestly, I don't think those levels will hold for much longer. The European markets remain very strong and, as we can see from these first few minutes, the market has only been open for 10 minutes. They've already tested as done, but basically they're retesting the area of the lows recorded yesterday. Holding this area could easily bring prices back to a test of 24.08, which corresponds to the HV area, and if that level is broken, prices could retest this entire upper area. We'll see how the market gets there and whether it manages to find upward momentum. On the downside, of course, we are monitoring this area here because breaking through it could easily bring prices back to retest SD2 first, and then even the VIX area, why not? In short, this whole area here is definitely a zone. The market could go back to retest, so between the VIX area and today's lower value area. All right, let's move on to OIL. As we mentioned, today there are the inventories, the data on US crude oil inventories. Yesterday there was this strong surge right at the opening of the regular trading hours last night, which pushed prices up to the 64 area, only to then pull back. So very sharp movements in just 15 minutes. It went from 62.40 to 64.20, so a strong upward spike that broke through this whole area of highs here, only to fall back into it afterwards. So we can consider this a false breakout, and the return into this area could easily, in my opinion, bring prices back to retest this zone here, possibly with a lot of let's say intensity. We'll see if this happens and how we reach these levels and whether these levels will act as significant support, because a break of this area would obviously open the way for new downward moves, possibly even down to the 60 area. Holding this area could easily bring prices back to this zone here, with the hope that they might want to break through probably. We'll see then how we get there. Let's move on to gold, which yesterday, as I mentioned in the chat, broke that wave that was taking shape, and at this point we obviously no longer consider it valid because it's gone. We've moved past it. So this is a pattern that has completed its course. Maybe I'll study it further and try to identify some other volumetric pattern or momentum, if there are any, of course. And so at the moment we have to acknowledge this new upward push, as I always say, with gold. There are unpredictable variables, like the actions of central banks, that go beyond the technical aspects. So sometimes they can render many studies useless, even if they're well done and well thought out. The actions of these major players can definitely overturn any kind of analysis or expectation. At the moment, from an operational and technical point of view, we're almost about to close, almost to the millimeter, the gap that was left open at the beginning of the week. So this is also an area to keep an eye on. because it could be a break of the gap, that is. A closing of the gap followed by a resumption of a downward movement. Let's see how it gets there and whether it manages to recover, because obviously if it moves back above the gap, that could mean there's an upward push, and we might even see a recovery of this area of highs here around 3,430, 3,440. On the downside, obviously, if it doesn't manage to get past this area here around 3,350, I would probably expect a new test right in this area here around 3,280, 3,260. Okay, SPX is basically dropping back down, but here we still have the wave that's valid, because essentially this could have just been a bit of market noise. So we are still basically, let's extend it a little. Let's see if I can do it without moving it too much. Let's shift it a bit over here just to have it visually aligned with the price movement. So we are within this wave, which we can treat as a retracement. We'll see whether there's enough strength to move downward, or maybe to complete the retracement and then start rising again. So here we are, just watching. Let's obviously take a look at Bitcoin as well, which yesterday broke through this double top that had formed between Monday and Tuesday, basically during the night, and then again yesterday during the day, especially at the close. It tried to push it down again, but then it found this upward momentum. Now it's broken through, and as you can see, it's working above that level, so it's now resting on these levels, which have now become support, of course. They correspond to the RD0 area, HV, and this could provide the upward push that might bring prices up to the 109, 110 area quite easily. On the downside, of course, we are monitoring this area here, because a break below this area could make this a false breakout, and so a return into this range could push prices down to the 104 area. Perfect. With this, we've reached the end of this daily analysis. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.